Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, April 7th, 2009. Well, we're seeing a little bit of a down day on Wall Street, folks, as you can see looking at this chart. And there's a couple key things I'm going to go over in today's video based on the chart analysis that we do, that we specialize in, focusing on technical trendline analysis, price, pattern, and time, that are going to give you an idea about what you're seeing in this market and what to expect for the rest of the day. Now, what we're looking at here are some key trend lines. Number one, we're looking at the spiders chart, the SPY chart, which mirrors the S&P 500, and you're looking at the 10-minute intraday. And I'm going to start on the 10-minute, then we'll expand to the 60-minute chart on the spiders. Now, again, just notice here, folks, this could be a little bit of a breakdown happening as we speak. Just notice this trend line. This is a major support line that extends back days and days and days, and it's now coming to a point where you bounced off of it twice, down to here again and bounced off, and now you're starting to break lower. We have to see where this candle closes. This candle just opened. We want to see if we close below it. If we do close below that, you may be headed for the lows of the day, and in fact, I will draw in that trend line now to show where the support will be on the lows of the day, right down in this range. Alright, so that'll give you a general idea about what you're looking at. Now, right now, the Dow is down about 178 points, the NASDAQ is down about 35, and the S&P down about 17 points on the day. Really about 2% across the board, which is a nice fall. Not a drastic fall, but a nice fall on the day. Okay, now what we're looking at here, folks, again, these are all your key levels. These are the main levels we've had in the charts for days now. I've added the ones, as we go lower, I add in the bottom ones, or they are in there from before, and as we go up, the obvious ones on the tops are in there as well. But what you're seeing here, folks, we saw a gap down in this market, and the beauty of this gap down was that it gapped below yesterday's low point. So right away, you know, as soon as you gap down, you're below support. In other words, this is now resistance. Remember, when you came down to this yesterday, midday, we talked about being support area, and you bounced off of that beautifully. And as of today, here over here, when we gapped lower, that becomes resistance. Remember, broken support, and we gapped below it, so that's broken support becomes a little bit of resistance on the way up. Now, in addition to that, you can see initially we gapped lower, and then you just started to sell off. You have the 200 moving average here in red. All right, we have the 20 moving average in yellow, and orange is the 50 moving average on your intraday charts. Those are the ones we focus on that we believe are the keys really to knowing the market. But really the trend line analysis, price pattern, and time is everything. Now notice how you sold off. You actually closed below your trend line here, okay? You closed below the 200. You came down a little while longer, but then all of a sudden you bounce back up and you create what's called a bottoming tail. And a bottoming tail is a pattern or a type of candle that will tell you that you're probably near a near-term bounce in the market. And sure enough, notice this, the low was never taken out there from this low candle. This bottoming tail with a close in the upper portions of this candle was intact. It's at the low end of the candle. That's a distinct bottoming tail. And what happens, you get another couple candles sideways trading, possible little bit of a bullish pattern here, never takes out the low. Again, the low of this current candle never got taken out. Then all of a sudden you see a buy program come in. Now this buy program takes the market up. It slams it right through the 200, right through our lows, which was resistance, and takes us all the way up to a secondary resistance point at this level. Now this level, again, I'll go over all these key levels, but notice how the 20 moving average in yellow gets touched along with a trend line at 82.65. So this level right here, 82.65, happens to coincide with a trend line which has gone back, and I can show you how far these are going back now. They're going back pretty substantially. You can see how this same trend line is all the way, keep going all the way back here, okay? All these go back multiple days. They've been very, very important to this market, and you basically rise all the way up into that point, and what we call a necktie. And a necktie can be known for being a cross between either two moving averages or a key trend line that we have in our charts and a moving average, and it's known as very, very distinct, strong resistance. So again, what you see here is a resistance point. This is generally a good shorting opportunity, and you can start to see the sell-off in the market take place. And at first you pull back a little bit, and this could be looked at as a bullish pullback, but then notice these two sideways candles, folks. And then see 1, 2, and then you attempt to break up, run into the 20 moving average, and then fail and come all the way back. What that's telling you is that it's a failed bullish move, and you have to be ready for some more downside. And sure enough, you get some more downside. You go back to that 82 support line right here, which we've had in our charts for days as well. Then you start to rally back up, and again, notice how this trend line right here is now crossing this 20 moving average, and in addition you have the 200 moving average coming up as well. That's telling you there's a triple necktie there of major resistance, and this is going to be tough for this market to get through. So what you're now seeing is major resistance. What happens? It sells back to the support, and this is what we touched on at the beginning of the video, how it looked like a little bit of a breakdown occurring here possibly. And what you see, again, a breakdown to support, a minor bounce back up to, again, this trend line, and this time the 200 moving average crosses perfectly at that point. Another necktie, 3 in the day, and then the market breaks down. And after multiple hits, and again, you've hit it once here, twice here, and then look at the breakdown that's occurring, guys. And you have to know your analysis. Just too many attempts at breaking out to the upside, failing, and what we will say and what we talk about in our premier chat room, which has video, and we go over these charts live in the chat room, is that when you have a move that fails to break out, and you literally failed once, twice, 3 times, more than likely the failure will yield a move to the downside. And that's exactly what you're getting now. You're getting a move to the lows of the day or close to the lows of the day, with support coming into play right around 81.70. So 81.70 will be support. If you clear that support and move lower, what you're going to see is a move to the gap fill. And this is a gap fill. Let me go back and show you where I'm getting this from. Alright, this is the same line right here that we're talking about at gap fill, as I just mentioned on this chart going back a little ways. That's at right around 81.30 or so, right around 81.30 to 81.40 in that range. Anywhere in that range right above 81 will be known as this level right in here as gap fill. Alright, and we'll extend that all the way over, and that's what you're seeing right here. So if we break this, this will be support at 81.70 support. If that breaks, then more than likely you're going to go down to around 81.30 to 81.40, which will be gap fill. That will be a significant amount of support right down there. Now let's talk a little bit about the upside, then we'll quickly swing to the 60-minute chart and show you a little bit of the analysis. But look at this beautiful sell-off. Did we call that or what? And again, it was just obvious by the attempts at a breakout, the failures, the hit of the support line, and then ultimately a breaking down. And this is actually turning out to be a very, very nice breakdown. And by the way, folks, in the nightly videos that are 25 to 30 minutes long, we obviously give you guys a heads up on positions that we currently have as swing trades and so forth. And one of the positions that I'm doing very well in with the chat room and the nightly video people is the FAZ, which I did unload some of that today at 1775 pre-market on a beautiful move up pre-market. It's come off those highs, but it still looks interesting down here. The only thing that you have to worry about is tomorrow you have some Securities Exchange Commission putting forth possibly the uptick rule and a couple nonsense stuff like that, which could affect in the near term the whole market, let alone the financials. So you got to be a little careful there with the financials over the next day or so. Be very, very cautious on those financials until we get past that. Now today, guys, Alcoa reports earnings after the bell. That's going to be very interesting. We'll have to keep a note on that. And again, just notice the breakdown. You're coming into support. See these tails, guys? See all these tails? This is telling you anywhere between this lower tail and these upper tails right here where you're hitting should be a little bit of support. Now I want to go to the 60-minute chart and let's discuss. 60-minute chart looks interesting because you kind of had a little bit of an M pattern here developing. You never took out the high, but nonetheless, M with a little mini A and a breakdown, and we'll see if this is another little A pattern. What you're going to see here is the 50 moving average should have very, very good support on this chart, and that's what we were just about retesting at the lows of the day today. So keep an eye on that level. That could be a very significant level right here, this 50 moving average. If this breaks, as I mentioned on the intraday, you're probably going down right into this level right down here, which will be gap fill. Notice the gap. Let me erase this line so you can see it. Here's your big gap in here that I was pointing to on the intraday and showing you guys, and this is exactly where you're probably going to go, which is right around that 81.30 level or so for gap fill. Now, once you get there, it doesn't mean you're necessarily going to stop, but there could be a little bit of a bounce there, which is support. All right. Now, again, there's some fair possibilities over the next week or so you go lower, but again, you want to just play support. You want to buy support, sell resistance. That's what we look to do. That's how we become so well known on our guidance, on our technical analysis, which is unique. Almost no one else does that. And just by the way, folks, in the research center, there's the Pro Trader watch list, the nightly videos for 25 to 30-minute videos on technical analysis of the markets. Goldman Sachs with charts. We go over charting, gold, dollar, oil charts, market charts. In addition, we have technical tactic, which is educational, the daily market report, the hidden gems report, a lot of educational information. And just like these videos, I go into depth about teaching about our techniques so you guys can all learn them. And that's really the important thing. We're here to teach and be educators as well as give guidance. Alright, folks, so you can see you're going to have good support right here at the 50 moving average. That'll be at the lows of the day today. If you break that, you're going to go probably to gap fill. On the upside, on the 60-minute, if you start to rally, you're obviously at the highs of the day, you're going to have resistance, and then obviously gap fill from yesterday will be your secondary resistance, and then your 20 moving average here on the Spider 60-minute will be your next level. Alright, folks, just again a reminder, come join the chat room. Byron, we'd love to have you. Come join the Research Center. It's also fantastic. Learning experience like none other, and a great place for guidance. Take care. Have a wonderful day. We'll talk to you tomorrow.